Hey guys, how's it going? The play I wanted to share with you guys today is Peloton. So I've been watching this company for a while now, and I think the stock is actually providing some good opportunities here, which I wanted to kind of talk about. You'll notice on their web, I'm on their website right now, and the demand is actually for deliveries a lot later than it was. They hired a new CEO last year, and you'll see here, I kind of said I'm going to load the boat on Peloton calls in March of next year. This was in October 23 of 2024. So it's been, I guess it was October 2020, you know, October of 2024. So you can kind of see it was right around here when they started having the breakout. So we're literally October 23rd. We're literally at the exact same level from a year ago. It's crazy how that works. So at this point, I kind of wanted to just talk about what I see with this going on with the stock right now. They hired a new CEO, which is kind of where I saw it here back in 2024, and we kind of played the run up, kind of unloaded a lot here, a little bit here, a little bit here, and kind of fully out of the position here. So what I was waiting for is this inverse head and shoulders, which I think will play out. So what I'm seeing right now, they're trying to right size the company. They are trying to get their free cash flow up. They don't expect too much growth this year, but they do expect it going forward in the coming years. So what I think this company could do is you could get a pretty big drawdown along with the rest of the market. I think Peloton from the peak to the trough, if we do get it, it would drop about 60%. Right now, it's dropped about 46%. I've started to kind of dollar cost average into some shares, but I've also bought a few leaps here. I think adding a little bit further on, like if we do get to like this level, would be much better, and I'll kind of explain why. So as you can see, I have a Fibonacci extension on this right now, and basically this swing low, swing high gives you where the projected price is once it breaks this 61.8 level. So you can kind of see it came back literally the wick right there, body right there. It's at this level. It broke that 730 and kind of lower. So at this point, the extension gives me 422, which happens to line up exactly with these levels right here. So what I think we can get on this is something like a basing here. We can get another base here and then a breakout. So this took approximately, let's look at the date and price range. So this basing here took about, I don't know, 135 days. So say it takes about 6 months here, right? So let's say it puts us into probably September of this year. This is a stock that I think you guys should have on your watch list because say it does something like this, right? And we do get this 420 level. I think you guys would want to buy that. The reason being is the company right now is basically 2.4 billion. A drop to that 420 level is about another 30% drop. Now the reason I bought this is because it held the 200 day. I think this would be a better zone, this 520. You can kind of see this, it's a resist or support level that's used to be resistance, now turns support. But I think if it drops to here, it'll kind of scare everyone who bought it here out. So if it does get to this 420 level, this is kind of what I'm suggesting. A 30% drop, it would be a 30% more drop from here, right? So from here to here is probably about another 25 to 30%, okay? Um, if you threw on 30% on market cap, it puts it at about 1.5 billion. Now, if you took a Fibonacci extension on it, say it did come here, okay? And it did something like this, where it's like, um, it's, oops, let's say it did, instead of this, sorry, instead of this, it did something like this, where instead of a inverse head and shoulders, it did more of a double bottom. So it went like this, down, based here, and then kind of turned up right here, and then turned up. So the reason I say that is because a lot of the levels seems to line up exactly, right? So if I did, let's say I put an extension on it, okay? And now I say I want to take this swing low, I want to take the swing high, and what I'm expecting to be the swing high, and the swing low. It would give me, oops, this is the swing low, okay? It would give me 1746. Let's see if I have all the numbers correct. I don't know why it's not giving me the wick. It's annoying. Is it giving me the wick? Okay, there we go. And let's say I get this 422, 423 level. It gives me 1746, which puts it right into this zone right here. It would come up against this resistance. It would come up into this high. So I think from this point onwards, you can get a 3x here, okay? Like 315, 320%. And I think it'll be a pretty big move. Now, it could turn from here as well. If we did that, we put an extension on, it would take it to 1912. It doesn't really line up here. I mean, you could say that it's similar. So I would start, to me, I've started buying already. Like I don't like that it's broken below these levels. Like right here, you can kind of see it's broken below these levels. It tells me the inverse head and shoulders is possibly not happening. So we're probably not going to get something like this. Especially with the broader market weakness, I think something more like this is more realistic. Now let's say this came and we got this. Let's say we got it in like April of this year, right? And then say it took a few weeks to base out and then started running into the earnings. I think the next earnings are in May. Or yeah, so let's say you bought it in like towards the middle, whenever we get here. Say it gets here in like April, middle of April, like April 15th or whatever, right? Let's say we bought the July 17th 2026 calls, and right now they're trading at $1.44. You want 100 contracts, it's 14,000. And if they were trading, let's say the stock is trading, we're talking April 15th, let's say the stock is trading around 450. The options on that date would be about 60 cents. So let's say you don't buy it now. Let's say you wait until then and you buy it at 60 cents a piece. Now you're putting in 16,000, and this is for July 2026. Our price target on this is 17. It's probably 17 to $20, right? 17 to about $20 is where I think we're going to be playing this to. You could probably push a little higher. The predicted output's giving me about 33, and then you can kind of see. I mean, this to me, this is the first level. This 1749 level, you can kind of see it lines up with this resistance right here. So I think you can safely say, okay, if we bought it, it would slam right into the 1750 line right here. So that would put this call at 60 cents or even $1.44 at about 170 right now. So on a $6,000 investment, by expiration, you're netting 84,000. Obviously, you start small, probability of profit 28%. It's a lot better than stuff I've seen, to be honest. Even if we bought it, let's say at $1.44, probably profit goes down quite a bit. Let's say we bought it at 250. Ultimately, I think this thing is going to be worth. Sorry, I was calculating 19. I think this thing is going to be worth, 17 to $20 in a year. So that's kind of what I wanted to share with you guys. I'll be sharing a couple more, smaller mid-cap plays that I think could be great opportunities. But this is something that I really, really strongly believe in, and I think it's going to be a good position in my portfolio. Like I said, I've started adding it here because if I'm wrong about this being lower, it could turn anytime. You know, like it could turn from this level here or from this level here, 520 or here. So I'm just going to buy a little bit here. I bought at 580. I'll buy a little more at 5, and then the remaining of the position at down at 420. I think here you really difficult to lose. Obviously, if it breaks 420, then you get the hell out, because the minute this breaks, I think it's a much different. It becomes a much different play. It's no longer exactly what I'm seeing here. So keep an eye on that, guys. Good luck and trade well.